Hello and welcome back to Smart Money. We're talking about women and money. If you're a woman and you're, feeling intimidated about how to start your money journey, we have you covered. In fact, we're having a lot of viewer queries that are coming in right now. So let's take them one by one. First up, Sukriti Tandon has written to us. She has an insurance-related question. She wants to know how important is a term insurance from a woman's perspective, or for a woman rather. Ridhi, you want to take this?
Sure. So insurance is very important. It's one of the core pillars of personal finance, and you have health and term, rightly so. So term insurance is extremely critical because honestly, bad times don't ask you and come. And for Shrutika, a simple way to calculate what's a good amount of term insurance, if you have no dependents, it's about 10x of a year's income. And if you have dependents, it's about 20x of your year's income.
Okay, got that. Well, we have another query coming in from a 19-year-old viewer who's written to us and wants to know how to start investing. I'm so glad that, her name is, by the way, Dhruhi. So, Dhruhi, thank you for writing to us. Priya, I want you to take this. I'm so glad that she at least has that awareness that she needs to start, because I wish someone had taught me at the age of 19 that, you should start early, you'll benefit from the power of compounding. But your thoughts?
It's great that you're starting to invest. I love it when people start to invest in from their first paycheck onwards. The great thing that you have to so young is that you have time on your side. So because you have time on your side, it doesn't matter how much you invest. Even the smallest investments can go to some exponential amount by the time you're 45, 50. So what I would want you to focus on is really start to put away a little bit. It could be as little as 1,000 rupees, 2,000 rupees. It doesn't really matter. What I would ideally like you to do is to, save 1% of your disposable income. But if you can't do that, anything is good. And the best way in which you can manage investments, in fact, the best way in which you manage even expenses, investments, everything is to automate it. So you earn a certain amount of money. Let's say it's 100. You automate all your expenses, your routine expenses, your electricity bill, your rent, everything. Let it all go out within the first 7 days of the month, including your SIPs. And what is remaining is your discretionary spending, which you can spend without guilt. So if you automate all of these things, you will make sure that your expenses are covered well, and your investments also are given as much importance as your expenses. And you're not deciding, how much am I going to invest after spending? So that everything needs to go out in the first 7 days of the month. And whatever you have remaining in the bank is what you have for yourself. Spend without guilt, but automate everything. And SIPs in mutual funds are a terrific way to get you started. You're young, so invest in equity. Create your emergency fund, which takes care of, jobs are uncertain today. So as long as you've had your 6 months of emergency fund created, do that first and then invest in equity.
Okay, great. That's some great advice. So automate your SIPs, and as they say, pay yourself first, right? So invest in yourself, which means invest in your own assets and your own investments, and then pay out others, which is perhaps your rent, your school fees or whatever. Our next query is from Neelima Mandal. She wants to know what is the best tax return investment that a salary employee can make. I mean, I guess she means tax saving investments that a salaried employee can make. Hena, you want to take that one?
Sure. So, hi, very good question. And I think for most people, your investing journey starts with tax saving, right? Which is very, very encouraging. There are many options out there, right? If you're, it really depends on how you want to structure this. Typically, tax saving comes with lock-in, right? So that's something you do need to understand. So your PF, for instance, if you're doing PPF, please understand that it is a 15-year horizon that you're looking at. The shortest lock-in period is ELSS, which is an equity-linked saving scheme. It's a type of mutual fund. And as the name suggests, it invests in equities. But it also depends on your risk appetite. I think ELSS is a great way, shorter lock-in, although it's actually better to lock in for a longer amount of time. But if you don't want to do that, and then you also get exposure to the equity markets that way as well. Of course, other than investments, there are other things that can help you save tax, for instance, health insurance. So I would suggest talking to an advisor, a CA, etc., see what's best for you. But these are some of the options out there.
Okay, well, we have another question coming in from Bharvi Dasan. She wants to know the best mutual funds to invest in. She's planning to start with 10,000 rupees per month. You want to give her any advice?
Yes, sure. So again, great questions, and I'm very happy to see women coming in with these questions. The one thing we do say is don't go with tips.
Okay.
please start SIPs. So actually, you should have an expert tell you which SIPs to invest in, which mutual funds to invest in. And you have platforms like ours and like LXME, where we've got experts, mutual fund curation experts who've curated mutual fund baskets based on your time horizon, based on your amount, based on your goals. So actually log on to like a regulated platform, which will give you really simple help on these things. And like we said, don't go for tips, go for SIPs. Really look at good advice from proven experts to answer that question.
Okay. Priya, I want you to come in on this. So, you know, what I've learned, at least in my 15-year investment journey, is that passive funds are generally, I mean, give you, on an average, maybe the same kind of returns that active funds do over a longer period of time. And it just gives you better sleep at night because you're generally just benchmarking the index. There is no, you know, human bias involved because there's no fund manager. So for someone who's in it for the long haul, do you think that passive funds is a better way to go than active?
I'm still a very firm believer of active funds. I think the fund manager can make a difference in terms of generating that alpha in different funds. Passive funds are for people. I think, you know, everything has a place in your portfolio. You can have a few passive funds, but I think if you're invested for the long term, I would recommend, you know, a mix of active and passive, slightly tilting towards the active, because I think, you know, our markets are not perfect markets. So there are irregularities in the market, and therefore those imperfections give rise to opportunities where you can generate a bit of alpha. The question lies on whether the alpha can be generated in the large cap space or in the small cap or in the mid cap space, and that's open to debate. But I do think that, you know, at least in my experience and in running a company for the last 20 years, I do believe that the actives have outperformed the passives.
Okay, all right. Well, we have one more final query coming in. Kiran Jain is writing to us. She wants to know if she should be, what she should be doing with the silver that she holds. She bought silver when the price was about 65,000 rupees, and we've all seen how gold and silver prices have rallied, right? Hena, you want to take that one for someone who's holding silver at this price? I mean, any suggestions?
I actually haven't been following prices of silver, etc. I think this really depends on what you want to do with that money, right? With jewelry specifically, and again, I don't know what form this is in, but with gold, for instance, we often say if you don't want to wear it, don't invest in physical gold. Try to do things like gold ETFs, MFs, gold bonds, etc. So because there's inherently like a cost of storing, there's security issues, etc. But I'm a huge fan of mutual funds and digitally investing your money. So if you think you want to get out of the silver investment and put it into something, like a mutual fund, you could do that. But one quick disclaimer here, of course, none of this is financial advice. And even to the previous question on what is the best mutual fund, that does not exist, right? If there was one best mutual fund, all of us would be putting our money into it. Personal finance, as the name suggests, is so personal, which is why there's no sort of one blanket rule, like just do this with your money. So many things, there's so many factors that come into play, right? Who are you responsible for in your family? How many dependents do you have? What's your risk appetite? What are your financial goals? What are your income patterns like, right? So take a lot of that into account. And I think for queries like this on where to put your money, what to do with it, I would consult a licensed financial advisor and see what makes most sense for you.
All right. Well, ladies, thank you so much for joining me. It was really a pleasure speaking to all three of you. And hopefully you continue to do the good work, and we will see a lot more women come into in the financial umbrella. And of course, if you have any questions, any queries, please keep writing to us. We love receiving feedback from you. Until we meet again, have a great weekend.